Okay, hey everybody, I'm here on vacation, so I'm gonna turn my screen off here. I'm down in the Keys for a couple days, and let's get to my screen here and show you TC2000. So we'll start out there. Now, on TC2000, I don't have the futures here, but futures are a little bit lower. We had a downgrade of the US debt basically, but when I'm looking at the S&P 500 and Nasdaq futures, which again, you're not seeing on your screen right now, they're still above the rising 5-day moving average. They're still above the VWAP from last week. And, the Nasdaq maybe starting to see that 5-day moving average flatten out a little bit, but had a great run. And when we look at, for instance, the SPY, we can see that, where would this market be right now in terms of the S&P? Be down somewhere around this area. So, we've got a headline, got an extended market, and it wouldn't be a bad thing this week, as I mentioned in my weekend video, for us to consolidate a little bit, maybe come down towards that 5-day moving average, bounce a little bit for a day or so, then start to test some lower levels. We've had this phenomenal run, which has caught a lot of people off guard, myself included. I wasn't trusting it down in here when I should have, but it doesn't matter because you don't have to buy low or even down here to make money. The fact is, you can make money even buying somewhere in here and starting to add positions. And that's where I am right now. And hopefully you've been participating in this upside. We're, we've, as I've said, week after week here, we've blown through every level that's supposed to be supply. And that's why I always call them levels of interest. And why, when you hear people say, hey, the market's at resistance because it hit this low or something silly like that, it doesn't mean anything. It's just a level where the market has touched before. What we need to see is a shift from the buyer, which we haven't. We had the potential a week ago, 1 week ago, we were talking about this as a potential scenario that maybe we will get stuck below that 5-day moving average and decline. Instead, we saw the big gap up on Monday. We had a little bit of trepidation in terms of buyers, some profit taking, but then the buyers took control here, and it was a huge week to the upside. You didn't have to be involved last Friday in the S&P 500 to make money on the long side. We had, 4.5, not counting the gap, solid days higher, and it closed right at the high. We had a little bit of news over the weekend, and now we're seeing some profit taking. Nothing to panic about that I'm aware of. Now, maybe we start to get stuck below the 5-day moving average. And if that is the case, well, then I'll become more defensive and say, let's just slow down here and let the market tell us when we should be a buyer again. We don't want to buy on the pullback. We don't want to buy dips. We want to buy strength after. So when we look at it that way, we look at stocks and say, where is my best risk reward? I'm looking to get involved on the long side, but do I want to chase stocks that have already run big? Do I want to chase Palantir up here? Maybe you do. I mean, it's a nice consolidation the last 3.5 days here. We have these higher lows. It's likely that Palantir will open a little lower on Monday. Is this prior band of resistance up here that people were incorrectly calling a double top? And we spoke about that last week. It's only a double top if it cut under here. It's just a place where sellers showed up twice. That's all it is. Go look and see what is an actual double top, because a lot of people get that wrong. So what we want to do is say, where are the highest probability, lowest risk setups? Is it in a stock like Tesla, TLSA? No, TSLA. Is that the lowest risk, highest probability trade right here, right now? Probably not, because again, we've run pretty far. Pullback would be welcome, even down to the 5-day moving average. Then maybe we get a bounce. And if the bounce makes a lower high and then breaks down below the 5-day moving average, then perhaps we see it pull back down. I usually use the month to date angle, which would be right here. But because this was a gap day the day before, I think that's the more important level. And if we were to see a pullback down towards that level this week, down towards 310, my God, that would be a great place for this market for Tesla to kind of settle in and make a higher low for the next move higher. Forget about this move. If you missed it, it's too late. If you're in it, you want to protect gains. That's the name of the game always. Are we in a low risk, high probability place for new entries? Now, if you look at Tesla right here, right now, and say, where were we just here at this point? So this little pattern here, we had a declining 50-day moving average right there. We had an advancing 20, and then the 50-day moving average started to rise right in here as it broke higher because we were getting rid of data from this day. That was where we were at that point 50 days ago. This is 50 days ago right now. So in looking at stocks, I look at it and say, is there a similar setup? And Apple certainly looks like a similar setup to me. I'm going to erase all this stuff. But if you look at it, 50-day moving average is declining. And maybe on Monday, we see a little bit of a pullback. So by the way, always on here, I have the daily time frame on the left and the 30-minute time frame on the right. Meaning each one of these bars is 30 minutes. I like bar charts. I'm not a big fan of candles. In fact, I dislike candles. But that's my preference. That doesn't matter to what you do here. So we've got this little band of resistance. Maybe we pull back a little bit and then get going and push through this level and make a move to the 200-day moving average, similar to, again, what Tesla is doing. So I'd say keep an eye on Apple, but Apple probably needs to, consolidate a little bit, pull back. That would be the best scenario in my mind for Apple to do before we saw it run away. And certainly this little gap lower here in the S&P and the Nasdaq, which are down 2/3 of a percent in the S&P 500, 3/4% in the Nasdaq. They're both right now on the VWAP from the Sunday open at 6 p.m. Eastern time. So, I'm not looking at this as, there's news, big deal. Let's see how price settles, what we do overnight, and whether or not there's going to be sellers still in there in the morning. So anyways, back to the screen here to look at what we've got going on. I did ask for some tickers to share from, first of all, Alpha Trend subscribers. And the first one there was CQP. And this is Chineri. I don't know how you pronounce it, Chineri Energy Partners. So when I see partners, it makes me think that it probably pays a large dividend, and it is, in fact, a limited partnership. So limited partnerships typically pay, and I don't know if it's a master limited partnership. If it's a master limited partnership, then you will get what do they do, a 10Q or K1 rather, K1 tax document, and usually get in May or June. So a lot of people don't like MLPs because of that. Anyways, this right here in the top bar, we see the next earnings report is August 14th. So that's not a problem. You could buy options on it if you want. The beta of this stock is 0.63. Here is this is the annual dividend. So the dividend for the last 12 months is basically 5%. So when I see a stock that pays 5%, I look at it and think, it's generally not going to be a very volatile stock. Although the average true range percentage, that's what I have here, is so the average true range from the prior day's close to the range the next day is 3.3%, which is pretty volatile actually for a 4.5% yield. So what I want to do here is look at this and say, where has it come from? It's come from 53 to 62. So it's come 9 points. Where does it have the potential to go before it's likely to encounter a source of supply that might be strong enough to become resistance? And I look at it and say, basically right here, right? This is prior support, and maybe that will become resistance. So that takes a couple points off in my analysis. The fact that we have a declining 50-day moving average takes a couple points off. Well, we add a couple points because the 200 is rising. Let's do this and take a look at the weekly chart, because that will allow us to see the true personality of the stock. And very in line with what a stock that pays a 5% dividend. We see these moves in here, but we see a lot of chop. So after these moves, we tend to see choppy action. And, the range of the last 3 years has been 46 to 68. So not a huge range. So that tells me that it's not really much of a trading stock as it is. If you like this company and you see something good about it and you want to put some money into it and collect a 4.5% dividend, that's the type of play you're looking at here. Although, again, I would say that just in the last week, the stock has come from 56 to 62. So for a high percentage dividend stock, it seems most likely that it's going to come down into here, consolidate a bit before it might be able to do this. So I wouldn't be thrilled about buying this stock right here, right now. I would say let it settle down a little bit because it's more of a, is this going to be the pattern of lower highs and lower lows? And if it comes down into that 59.60 level, maybe you just want to buy it there because you like the dividend. I don't really, have a good feel for strong dividend for big dividend stocks. So that's the way I see it. And as I always say, if you're asking me a question about a stock, I always look at it from a trader's perspective and a swing trade perspective. So I'm a trader, a swing trade trader. And if someone asks me about a stock, I generally look at it from that perspective. If you're an investor, you've got to look at it a lot differently. I was asked to take a look at Unity. And Unity, let's look at the weekly chart first here. And, it got going nicely Friday afternoon. And here, again, I'm showing the personality of the stock. Now, it's had a pretty tight consolidation the last 4 weeks here. So that I like. But if you look at it realistically, we're still below this prior band of support from from two from a year and a half of trading. That prior support is holding as resistance. So Unity, if it was really a good stock, it probably would have got going by now. Let's take a look at the anchor off this peak right here. So the best thing I could say about Unity is, it's right at the 2-year anchor, which is basically the anchor off of that high from 2020, late 2023 right there. Where has it come from? 15 to 22, big percentage move. It's kind of lagged the market in that it's not breaking out the way other stocks are. And bigger picture is it's in a choppy range. So most of the last year has really been in this range of 20 to 25. And here we are pretty much in the midpoint of it. The 200-day moving average starting to rise. So from a swing trade perspective, if I was to be looking to get involved in this stock, I would be saying this blue is the year-to-date anchor, the orange is the anchor for the election. This solid black, thick black is the 2-year anchor. Here's your 200-day moving average. Now that's good. For the first time in a while, we made a slightly higher high above that 200-day moving average. The problem is that we ran from 21 to 23. So we just saw this stock move 10% here. Why is it doing that? I hate it when it does that. So it just ran from 21 to 23. What I'd want to see from Unity if I was to be a buyer is maybe it pulls back like this and then gets going. I don't want to buy it up here. If I was long, I would say, where's my most recent relevant higher low to protect myself from the stop? It probably has to be under here. So I'd rather buy it as it's kind of rallying higher with a stop under here, buy strength over there after a pullback rather than just buying this runaway freight train. Reddit, this one, it's kind of, we spoke about an inverted head and shoulders pattern. It tried to break out this week and it failed. So now it's just a stock that needs some time to recover. Maybe it does a little bit of this week. I don't see anything really compelling about Reddit right here, right now. Now, the good news is we've got a rising red dashed line. That's the 20-day moving average. The 50-day moving average, the dashed blue line, you can see, is declining. But on Monday, we get rid of this data. It closed right here 50 days ago. On Tuesday, we get rid of this data and it closed there 49 days ago. So what does that mean? If we go sideways, the 50-day moving average will continue to decline slightly. But if we go sideways on Tuesday, 50-day moving average is going to flatten out. Then if we can start to see a rebuild like this, then perhaps it's a buy here with a stop somewhere over there. Now, it's not that I'm trying to predict it's going to do this in particular, but it means that, we probably need to still just, settle down after this failed breakout right here and make sure that it's not a failed breakout that leads to a complete failure, that it needs to rebuild a little bit, allow the buyers to regain control. And if they do over here in this type of scenario, not a prediction, but in this type of scenario, we would want to be a buyer here and then say, okay, our stop goes under there. Right now, if we buy it, we're kind of buying it in no man's land. And I just don't see the advantage to a new money purchase in Reddit. And Align, ALGN, I've still got a declining 200-day moving average. And when I look at that, I also look at this. I'm just pointing to the first things that, showing you the first things that jump out at me when I look at a stock. I look at this and I see we have a prior band of support. There's a lot of people who thought that was support, and then it broke down hard from there. So it broke down hard, and if they didn't scare you out, if it gets back up to this 200 level, which is 12 points away, so that's still a nice little trade. But we've got two things. We've got that prior band of support, and support at broken tends to. I'm not going to look at this and say, hey, there's resistance at 210. I haven't been doing technical analysis for 6 months. I've been doing it for 30 years. So I know that there's the potential for supply here. Why is there potential supply? Because we saw in this case with Align that we saw the first time 200 was hit, it bounced up to 260, a beautiful bounce up to the 200-day moving average. Then it came down there again, and that was 3 months apart. And then it rallied up to 240. Then the sellers took control. So the sellers were getting more aggressive price wise. Then instead of 3 months, it was 2.5 months. So they were getting more aggressive time wise. And then it bounced up to 230. So again, the sellers took control. They were getting more aggressive. So in here, as it was making lower highs, this, call it a descending triangle if you like, it was just breaking down. As it broke that 200 level, all the people who bought, thinking 200 was, the institution or institutions that were there saying, we're going to suck in all the stock we can at 200 and create support. As it broke down, either they're getting out or they're looking at it and saying, well, institutions or otherwise, basically the prior support tends to act as resistance because there's price memory in there. We've got the 200-day moving average, which often acts as resistance. And when we have a declining 200-day moving average, most of the time rallies fail. So in terms of risk reward, maybe you're going to see a move up towards that 200. And we have to look at it from a risk reward standpoint and a probability standpoint. It's probable that it will encounter supply in this zone. So do I want to buy it? And maybe you do. Maybe you want to buy it above here with a stop under there. So if you were to buy it at, let's say, actually did this a little bit first, and then to buy it right here with a stop under this level. So your stop would go at, let's just call it 183 to keep it a round number. And we're buying also at a round number 189. So that's 6 points. And your potential upside is maybe 12, 13, 15 points. Is a 2-to-1 risk reward to risk rather, suitable for you? That's up to you to decide. But when I look at it, I say it came from 140 to 190, 195, in fact. It's expended a lot of energy getting here, and it just doesn't seem like the best candidate for continued upside. So, as I always say, if you don't tell me that you're looking at it as a short, and you just give me a symbol, I'm assuming that you're looking at it as a long candidate. So that's probably not the best risk reward. Intel, just a garbage stock. It's just been in this horrible downtrend for a decade. Forever. It's just a terrible stock. It's the worst semiconductor, and doesn't mean you can't make money in it. But you look at that weekly chart. At best, you could say this is a stage 1 accumulation, but we've still got a declining 40-week moving average. Now, this is the line. This is where we were 40 weeks ago, 42 weeks rather. So 42 weeks is really closer to the 200-day moving average than 40. because you have to consider half days and holidays. So here's our 200-day moving average right here, the black dashed line, and we're still declining. So when I look at that, and then I look at the stock overall, what's been an important level? This sure looks like an important level right in here. It's been support and resistance, and if they didn't scare you out on the way down in here, they're likely wearing you out. I just don't see anything interesting about Intel, certainly not on a daily time frame, not on a weekly time frame. On a 30-minute time frame, we're consolidating. Maybe there's something in there if you really want to pay close attention to the stock. But why wouldn't you want to pay attention to a stock that's best case accumulation zone? Worst case, it's still just something nobody seems to care about for more than little bounces along the way. And I never mean to be a downer about these things. I'm just giving you a look. LUCD Diagnostics sounds like a biotech stock to me, sounds highly risky. Let's look at the weekly chart on this, try to get a sense of the personality of it. So when I look here, first thing I want to do is set an anchor off the IPO, see how we're responding to that. I want to go maybe to this high. And you can see from that anchor, we've had, that had been a resistance for a while. Then support, shakeout. Now it's trying to stabilize again. Let's look at the daily time frame. Let's look up here. It's 961,000 shares is the average daily volume. So that's sufficient liquidity. Earnings aren't due till August 11th. Average true range percent is 6.3%. We've got a declining 50-day moving average. Again, it's just a stock that, I don't know, it doesn't excite me. Um, it's a dollar stock. I just don't see anything compelling there. I'm sorry, I don't have any special insight into that one. Adaptech, now, this is one I've spoken about before, and it's nice to see that that band of resistance over here seems to be holding a support. We've got a rising 20 and 50-day moving average. We've got a rising 200-day moving average. When we look at the weekly chart, we say, hey, this is a nice uptrend. It's rallying higher. Then I look at these bars on the daily time, I'm sorry, in the weekly time frame. What I see is a whole bunch of chop in here. And that just kind of seems to be the personality of the stock. Now, the average true range percentage-wise is just about 9%, which makes it a little bit riskier stock. So when you trade those higher ATR names, you've got to, keep your risk a little bit in check. So here's where we are on the shorter term time frame. That is the anchor off the low from the gap for the market. Let's put an anchor off this gap right here because that's relevant to this stock. And here we can see we're stuck below that. We've got a declining 5-day moving average. The 5-day moving average is likely to continue to decline on Monday as we get rid of this data, and even on Tuesday as we get rid of this data. So I don't see anything compelling here. If it got back above 925, that would make it more neutral right up in here. And if we were to consolidate and hold the 5-day moving average and then build some energy and get going, then I think I would much rather buy it here at a higher price than over here and gamble below a 5-day moving average. Because if I bought it here, I could say, well, I'm going to set my stop underneath that higher low at the 5-day moving average. Otherwise, it's a biotech stock. I don't know anything about this company. And biotech stocks can, especially these little ones, can be kind of nutty. Now, this one seems to trend okay. And when it was above the 20, 31, and 42-week moving average, it made some nice moves in here. But again, look at the volatility of the stock. Look at the range on these weekly bars. They're pretty wide. So you need to trade it off a shorter term time frame to get your proper entry. And I don't think that's here yet. On the encouraging side, we have a higher low. On the discouraging side, we have a lower high. So back to what does that mean technically? Maybe we're going to trade within this, come up to that top end, build some energy, and then break higher out of this ascending triangle. We call it an ascending triangle because the primary trend was higher. But right now, again, just not compelling. Soundhound, let's take a look here. And Soundhound, where has it come from? It just came from $9 a share to 12.50. So it just ran 35% last week. So that was last Monday. So it just ran 35%. And now it's in consolidation zone. It's nice to see it's holding the 5-day moving average. And I think you're going to see a little shakeout. And if it doesn't completely fail, then look for it to tighten up a little bit and then maybe get going. But buying it right here, right now, I just don't see it quite yet again. And, part of what I'm saying here is a little bit biased by the fact that we're gapping lower in the market because Moody's downgraded US debt. And, you know, keep that in mind. What I say on a Sunday night, the futures could be down 3% tomorrow morning. They might be up a 0.5%. So when you look at things like, as I've mentioned, the biotechs, they've experienced a lot of bad news, but they've made a stand at the anchor off of the April 7th low. And now, if they can pull back a little bit and maybe these things can get going. But the problem is with a stock like Adaptech, I just don't see it really, helping that one so much. How about APP? APP has run from 200 to 373.80. So what is that percentage wise? 18 on 20. It's run 90% off of that low and doesn't mean it can't continue higher. The last time it did a 90% continued to move. You're getting into a little bit of nosebleed territory. And when it gets extended like this, like it was extended over here, you can see sharp, sudden pullbacks. So you have to look at the personality of the stock and say, after these big 90% runs, does it make sense to get excited about new purchases? It doesn't mean you can't make money or that the odds might not be there for a good trade. But I would rather see that app comes down, sees a swift shakeout. Then if it was a quick recovery, I'd much rather be interested in the same price over here after it did that because I wouldn't want to see a shakeout. And it's possible if it would see that shakeout down towards 330, that would be down in towards this zone right here. Maybe not close that gap, but that would make it a lot healthier, I think, because we have not corrected much after this, in particular from 220 to 380. So 16 on 22, whatever that percentage, it's getting into nosebleed territory and purchases up in there, if you're going to trade them. Again, doesn't mean you can't make money and it might not just continue straight up to 400. And I'd be happy for if that happened. But are the odds as good as it going from 360 to 400 as they were from 260 to 300? I think probably not. So if you're going to trade them when they're up in this kind of nosebleed territory, you have to look at it and say, I'm going to trade it, but with smaller share size. And what's the trend over the last 4 days is a little pattern of lower highs and lower lows. So it's getting, again, the whole market has had this huge rally. Now, CMG I was asked about, and CMG I like a little bit better because it had this resistance right here, and it's making these higher lows. It hasn't just run, 60%. It ran from 45 to 52, not a huge move. And this zone, I would also be aware that, what's the average true range is 2.6% on a daily basis, but intraday, we see some pretty big moves in here. So you probably have to have your stop somewhere down under here. If it broke below that, then I would think that would nullify this attempted move past the year-to-date anchor. But now that it's above it, I think it's good to look for a long for a move initially to the anchor from the election and more likely up to the 200-day moving average and the 2-year anchor. Those are potential levels of supply. So as long as it can hold above this little higher low, then I think you're looking at something that has the likelihood that it can continue to move higher. Rocket Lab, it's kind of, again, 20 to 25 over the last 6 days. That's a 25% move. Does it mean it can't continue higher? No. But with the market maybe about to undergo some profit taking, I would much prefer it to do this. This is what I'm predicting. This is what I would prefer. A little pullback and then to be a buyer right here on strength. I don't want to buy stocks that are up 25% in a week. I want to see them make a pattern of lower highs, lower lows, shake people out, consolidate near that 5-day moving average. And if they're still strong, to buy it here with a stop under there. So we're right now at 6:30. And as I said, I'm on vacation. I thought about canceling this, but of course I didn't do it. So hope everybody has a good week of trading. And again, I'm never trying to be a Debbie Downer about these stocks. As I always say, risk management is job number one, and that's not just a phrase. That's built into my DNA after years of getting the shit kicked out of me and making dumb mistakes in the market. That I know for me, I need to manage risk very carefully or run the risk of ruin. And I love trading stocks. I want to continue to do this till I'm 80, not till I'm 94, whatever Warren Buffett is. I don't want to retire from this. And I certainly don't want to let the market make me retire. So have a good weekend or good week ahead. Sorry, the weekend's over. And thank you for tuning in.